Good morning, I'm Chad Justice, and welcome to Market Monday for July 20th, 2026. Last week, America's largest banks reported the most profitable quarter in the history of American banking. However, the market sold off over the familiar worries of war and a disruptive AI competitor. And that disconnect is today's story, and it holds a lesson for every investor. And let's start with the facts. On Tuesday, all 5 of the nation's biggest banks reported earnings. Every single one beat expectations. JP Morgan earned $21.2 billion in one quarter. No U.S. bank has ever earned more in 3 months. Goldman Sachs delivered its best quarter ever. Its earnings nearly doubled from a year ago. Wall Street surged on trading revenues and help from a milestone initial public offering. SpaceX went public in June, raising $86 billion. That made it the largest IPO in history, and the fees were spread across the industry. The strength runs beyond the banks. This earnings season is on pace for a second straight quarter of profit growth above 20%. Further, that inflation report that we flagged last week, it came in cool. Headline consumer prices, which include energy costs, fell 0.4% in June. That's the largest monthly decline since April of 2020, and annual inflation eased from 4.2% to 3.5%. By any measure, that's a strong week of fundamentals, and the market fell anyway. 2 fears did the damage. First, the ceasefire with Iran collapsed. The United States reinstated this blockade of Iranian shipping in the Strait of Hormuz. With strikes resuming on both sides, and the ceasefire canceled, oil jumped back above $80 a barrel. And this stalled the trend of falling gas prices. When caution follows from that, June's cool inflation reading came before oil rebounded. And if things continue, July's data will likely run hotter. Second, anxiety over AI spending returned. Taiwan's semiconductor makes most of the world's advanced chips. The company beat expectations and raised its outlook. And the chip sector fell anyway. The reason? A Chinese firm released a new open source AI model, Kimi K3, that keeps up with the American giants Claude and ChatGPT at a fraction of the cost. And investors are again questioning whether the massive investments in AI are going to pay off. Those fears caused chip stocks to drop more than 4% on Thursday, and the Nasdaq followed them lower. Notice the pattern? Strong fundamentals and record results were met with a sell-off over worries of cheap competition. When good news gets sold, emotions are in the driver's seat, not fundamentals. We saw the same pattern in February's software sell-off. Discipline carried investors through then, and then remains the playbook also now. Looking forward, these are the dates that we have circled on our calendar this week. On Friday, the temporary tariff surcharge we covered in March expires. And next week, the Federal Reserve meets, after Kevin Warsh vowed before Congress to make elevated inflation a thing of the past. That brings us to your plan. We're past the halfway point of 2026, and your income picture for the year is taking shape. A mid-year tax checkup takes about 15 minutes. We'll review your tax situation to evaluate whether Roth conversions make sense, if your assets are positioned for tax efficiency, and discuss strategies that may be beneficial. Small adjustments in July beat surprises in April. We aren't tax advisors, so consult your tax professional before deciding on any changes. If your income changed this year, reach out to us and we'll get you on the calendar. And if you know someone else who could use a second set of eyes, forward them this video. That's all we have for you today. As always, thank you for watching this week's edition of Market Monday. And join us again next week for more of the insights that matter most to your money.